Trump just pulled a shocking move, pressuring Japan to crash its own economy. Why? What's he really planning? As Japan fights back and markets shake, is this the start of a new global financial war? Come, let's break down. Chapter 1. The trade war begins. Something huge is going down in the world economy, and at the center of it are two financial superpowers heading straight for a crash: the United States and Japan. On one side, we've got Donald Trump, bold, loud, and determined to change how global trade works. He wants everything to go America's way, no matter who gets hurt. His actions are shaking the markets, upsetting old allies, and creating a storm far bigger than just politics. On the other side is Japan, a country already struggling with major economic problems. Now it's being dragged into a nasty trade war it didn't ask for. Trump's latest move? He wants Japan to crash its own currency, basically hurting its economy, just to help the US dollar. Sounds crazy, right? Why would Japan ever do that? Meanwhile, things aren't as perfect in America as they seem. Inflation might be low and the stock market is up, but behind the scenes, something scary just happened. Investors didn't buy US debt. That's a big red flag. This isn't just a trade disagreement anymore. It's turning into a full-blown economic showdown that could change Asia and the entire world. Chapter 2. The cracking facade. As 2025 unfolds, Japan's economic model is showing cracks that even the most seasoned economists can no longer ignore. The latest Q1 GDP data released from Tokyo confirmed what many feared: the Japanese economy is contracting again. The numbers speak volumes. From January to March 2025, Japan's GDP shrank by 0.2% quarter-on-quarter, its first such decline in over a year. On a year-over-year basis, the figure is even worse, a 0.7% contraction, vastly underperforming forecasts. The roots of Japan's stagnation run deep. For years, its domestic economy has been burdened by sluggish demand. The nation's population is rapidly aging, with more retirees than working-age citizens. As consumer spending dwindles, so does internal economic momentum. Making matters worse is Japan's ultra-loose monetary policy. For more than a decade, the Bank of Japan has pursued near-zero interest rates, meant to stimulate growth, yes, but at the cost of long-term economic resilience. Now, the consequences are unfolding in full view. Exports, once the reliable engine of Japan's growth, are plummeting. Japan's automotive sector, a national symbol of innovation and power, is bleeding. Real wages are falling, despite government attempts to boost income with nominal hikes. This puts Japan's policymakers in an impossible situation. If they raise interest rates to tame inflation, they risk choking off what little growth remains. If they keep rates low, inflation continues to erode household purchasing power. The country is trapped between a rock and a hard place, made even more complicated by the political pressure building at home. With a major upper house election on the horizon, the government is in no position to make bold, unpopular economic moves. And yet, Japan now faces even darker clouds, because just as Tokyo tries to steady the ship, a tidal wave is coming, driven directly from Washington, D.C. Chapter 3. Trump's economic war begins. On April 2nd, 2025, the United States under Trump's administration struck hard. A sweeping 24% tariff was slapped on all Japanese imports. As if that wasn't enough, an additional 25% tariff was applied specifically to Japanese automobiles. Let that sink in. The US is Japan's largest car export market. In one stroke, Trump put billions of dollars of Japanese industry at risk, and he's not done. While these tariffs are currently on a temporary pause until July 9th, full implementation is set for August 1st. Negotiations are ongoing, but the message from the Trump administration is brutally clear. Japan must offer a better deal, or the economic punishment will be swift and total. Trump has publicly hinted at flexibility, but only if Japan submits to US demands, which include, according to insiders, monetary adjustments that would artificially devalue the yen to benefit US exporters. To understand the impact, look no further than Toyota, the crown jewel of Japan's manufacturing empire. Just weeks after the tariffs were announced, Toyota reported a staggering 35% plunge in net profits. That translates to $21.6 billion evaporated, gone. In the words of one Tokyo analyst, This isn't just a blow to Toyota, it's a message. The US is willing to destroy Japan's core industries to force compliance. The optics are devastating. Japan, already on shaky ground, now watches as its biggest companies hemorrhage cash. But Trump isn't backing down. His base sees the tariffs as proof of strength, a president finally standing up for American jobs. For Japan, however, this is economic warfare disguised as negotiation. And just when you think the pressure couldn't mount any higher, the battlefield is no longer just exports and tariffs. It's now turning toward Japan's monetary policy, where Trump is demanding full control. Chapter 4: US Pressure on Japanese Monetary Policy. The United States is now trying to control how Japan runs its own economy. Specifically, the US Treasury is telling the Bank of Japan to tighten monetary policy. That means they want Japan to raise interest rates and stop the yen from weakening further. But Japan is already in a technical recession. Its economy is shrinking, not growing. And Japan's debt-to-GDP ratio stands at a staggering 261.3%, the highest among all developed countries. In simple terms, Japan owes more than 2.5 times what it produces in a year. Raising interest rates in this situation could be dangerous. It might cause a bond market collapse and widespread bankruptcies in banks and big companies, further choking of economic growth. Yet, the US is pushing forward with this risky demand. Some experts believe Washington knows exactly what it's doing and that this pressure is not just about fixing global markets, but about shifting America's own economic problems onto its allies. The goal? Force the Japanese yen to rise in value. That would make Japanese goods more expensive in global markets, while American products become cheaper and more attractive. It's an aggressive move to gain a trade advantage. Seems like a strong plan, right? Hurt Japan's economy to help America. But while Trump is fighting overseas, the US is sinking in its own mountain of debt. Chapter 5: Desperate Debt Management. The Treasury needs to sell $22 billion in long-term bonds, but investors are pulling back. There's a quiet rebellion happening in the bond market. Traders are calling it a silent boycott. Yields on 30-year treasuries have shot up to 5.12%, the highest level since 2011. This rise signals that investors fear inflation and no longer trust US financial stability. Even Japanese pension funds, historically reliable buyers of US debt, are pulling out. They're now investing in euro-denominated assets instead. This shows growing doubt about America's ability to manage its economy. But the strategy doesn't stop there. Chapter 6: Japan's Strategic Counterattack. Instead of giving in, it's crafting its own long-term response. And the main tool it's using is the CPTPP, the Comprehensive and Progressive Agreement for Trans-Pacific Partnership. Originally, this was a US-led trade agreement, but America dropped out, and now Japan is turning it into a powerful non-US economic alliance. Even more shocking? It's considering letting China and Taiwan join the deal. That would drive Washington crazy. Why? Because it hands economic influence straight to America's biggest rival. This is a serious power shift. But Japan isn't stopping at paperwork. It's redrawing the economic map in real time. Exports to CPTPP member countries have surged by 13.4% over the past year, signaling stronger ties and growing trade without relying on the US. Meanwhile, business with Mexico and Canada is booming, especially in the auto sector. Japanese giants like Toyota and Honda are shifting factory operations to Mexico, a clever strategy to dodge US tariffs and keep profits flowing. These aren't short-term fixes, they're long-term moves designed to protect Japan from future American economic threats. Japan is also working hard to build a supply chain that doesn't rely on China or the United States. For example, Mitsubishi Materials is securing rare earth elements from countries like Vietnam and Australia. Why is this important? Because rare earths are critical for everything from smartphones to electric vehicles. And right now, China dominates this market. By locking in deals with other nations, Japan is reducing risk and preparing for long-term independence. But apart from all these, here's where Japan holds serious power. Chapter 7: $1.12 trillion in US bonds. Japan owns $1.12 trillion in US treasuries. That's a giant chunk of American debt. If Japan decides to sell even part of these holdings, it could crash the US dollar and trigger global financial panic. This gives Japan enormous leverage in ongoing trade discussions. While they've never publicly threatened to use it, the option is there, and Washington knows it. Simply, instead of waiting for Washington to change, Japan is building something stronger, a fortress economy, a powerful strategy to stand strong no matter what the US throws its way. Japan is locking in trade deals that completely bypass the United States, choosing to deepen its partnerships across Asia and the Pacific instead. It's also refusing to give in to demands to crash its own currency. Japanese officials are taking full control of their monetary policy, determined not to let foreign pressure dictate the value of their economy. Finance Minister Katsunobu Kato has said there are no current plans to discuss exchange rates with the US, a sign Japan is holding its ground. The road ahead looks tense, and with every passing day, the Japan-US trade dispute inches closer to a full-blown economic showdown. Japan, once cornered by tariffs, currency manipulation, and diplomatic pressure, has flipped the script. America tried to tighten the noose, but Japan built a fortress instead, cutting new trade deals, shifting production to Mexico, securing rare earth independence, and locking in power with a $1.12 trillion ace up its sleeve: US debt. Meanwhile, Washington is drowning in its own crisis, facing a bond buyer rebellion, inflation spikes, and tariff backlash from over 70 nations. What was meant to be a pressure campaign has become a global backfire. This isn't just about economics anymore. It's about who gets to shape the future of world trade. Will Japan break free and lead the new Asia-Pacific order? Or will America's strategy implode under its own weight? Is this the beginning of the end, or the beginning of a whole new era? Smash that like button and drop your thoughts in the comments. And don't forget to subscribe, because this trade war is just getting started, and you won't want to miss what happens next. Welcome to the new rules.